Welcome back to Strongman Personal Finance. We're going to roast Jeremy Lefebvre by reacting to his reaction. So this is a reaction of a reaction to Palantir. So Jeremy Lefebvre is somehow all into Palantir now. He's big on Palantir. Why? Because it's popular on YouTube. And now he's trying to use the recent rise of Palantir to make it seem like he's genius. And somebody actually paid me for this video. That's right. I was paid 40 smackers to react to Lefebvre reacting to Palantir's earnings to see if he's actually speaking the truth. Because Lefebvre has a history of misreading financial statements, and he doesn't even look at the statement of cash flows because he literally doesn't understand how it works. I'm a certified public accountant, and I'm not saying I'm the best CPA in the world, but at least I can read a statement of cash flows. So let's go ahead and listen to Jeremy Lefebvre. And I'll let you know if he's an absolute clown or not. So enjoy, because somebody paid for this. I'm so rich. I'm so rich.
Let's take it a step further. Let's go a little in-depth nitty-gritty here for a moment, okay?
Okay, first of all, we're going into the nitty-gritty. So he basically circled every single line. Look at he circled every single line. What is the point of circling every single line on the income statement? Can somebody explain that to me? I don't get it. Like maybe 2, maybe 3, but all of them? Great analysis there, Lefebvre.
Very important things I have to show you here. Check out the revenue. Revenue came in at $525 million versus $446 million in the same quarter last year. That's a rise of about $79 million, okay? Very impressive in this environment, but here's the best part.
Okay, look. It's all about the percentages. It isn't the gross number of revenue. If Microsoft grows their revenue 1%, that's going to be an insane amount of revenue. Okay, if Walmart grows their revenue 1%, that's going to be an insane amount of revenue in absolute terms. But it's 1%, okay? Palantir's revenue growth rate is slowing down. It's a very consistent trend. In this most recent earnings, they bucked the trend because their revenue growth rate was quarter over quarter was like 18% versus 17.5 the one prior. But their revenue was slowing down significantly, okay? And their projections for the future are even lower. This is turning into a value stock. This is what's happening. But it went up by 70 million. That's a big number. Whoa, holy smokes.
Cost of revenue only rose $13 million, okay? I can tell you if Palantir keeps putting together numbers like that, the gross profit is going to go to the moon, okay? Absolutely ridiculous. When you have that level of difference between your revenue and your cost of revenue, your gross profit is off to the races, okay? And as
all right, let's calculate the gross profit margin. I want to check him on this. So the gross profit margin for the prior year was 446, 357, 78%. Okay, I took the gross profit, which I got the numbers right, divided by the revenue. So 78.8%. The gross profit this quarter, 79. Okay, they improved their gross profit by like 0.8. I mean, that's an impressive. I'm not saying that's a bad thing, but he's acting like, oh my God, their revenue grew so fast and their cost didn't go that much up. It's basically the same gross profit. What a moron. This guy, zero. And this guy is stupid. Okay. This guy is very, very dumb.
That's exactly what we saw happen. $417 million of gross profit for the company versus $351 million in the same quarter last year. Phenomenal. Now,
you don't even know how to calculate the gross profit margin, you absolute freaking idiot moron.
Sales in marketing was up substantially year over year, up almost about $27 million roughly, okay? Now, you might look at that as a negative. Oh, they're spending so much. I don't. I have this circle green for a reason. This is great news.
He circled everything. He circled everything.
Best of breed product. Their products are amazing, okay? What they lack is that sales and marketing team. So if there's one thing this company needs to spend on, it's sales and marketing, okay? They've got to get more deals through. They got to get more clients on 3-year, 5-year, 10-year contracts, more and more and more. It's not for Palantir, their product has never been a problem. Their product is best of breed. Ask anybody who's an expert in this field. They'll tell you, like, Palantir is 101, okay? This is its own league, okay? And the engineers at that company is phenomenal. So it's not like they need to necessarily spend a fortune more on R&D, okay? And they're not. They're keeping R&D roughly in line. They're just, slightly raising it year over year as far as research and development.
Okay, let's see how much they change their sales and marketing as a percentage of revenues. Okay, because a lot of the times you can get easy information to see if they're actually spending more. So sales and marketing was, did I do that correctly? 187,093 was 35% of revenues. Okay. Let's do it for the prior quarter. 1648. Oops. Let's do this again. 160,485 divided by 445, 357. Okay, they're spending the same percentage on sales and marketing. He's not even doing basic analysis, okay? He's just saying, oh, the number went up and this number went up and this number went down. You have to look at the percentages. You have to look at the margins. Their marketing spend is basically the same. Basically the freaking same, okay? They're spending more because they're spending a certain percentage of their revenues on marketing. Wow, great analysis there. It went up, and that's a good thing. Also, it as a percentage term, it didn't really go up.
This is where they need to really spend on. They need to get massive amounts of clients onto their product, obviously, okay? So that's phenomenal, okay? Obviously, they're continuing to spend R&D, just keep their products at the creme de la creme, the A-plus products, and that's great. Love to see that, okay? General administrative, they actually dropped that year over year. That's beautiful, okay? This is flawless execution by Alex Karp. The way this team has turned around this company over the past few quarters has been, in my opinion, it's a historic kind of turn here. Nonetheless, folks, and this is a year that's going to make and break companies, okay? It's going to make and break companies. And we see certain companies that are turning their companies around and getting these ships back on the right tracks, okay? One is obviously Fubo. If you looked at their earnings on Friday, another here is Palantir. They're heading in the right direction.
Fubo was a complete freaking disaster. Okay, so why is general and admin down? It's because their stock-based compensation expenses going down. The vesting period of the options are coming to an end. A big reason a lot of these margins improved is because stock-based compensation went down. It's as simple as that, okay? Oh, it's flawless execution. No, the accountants recorded stock-based compensation expense over the vesting period, and now that the stock-based compensation vesting period is over, now they're not recording the expense. That's why general and admin went down, okay? And they actually go into more detail right below this.
Operating expenses, in this environment and with sales and marketing going up as much, that's very well done, okay? Now,
sales and marketing didn't go, as a percentage of revenues, it stayed exactly the same.
Here's where things get very interesting, and you've got to pay attention to this. This matters significantly. Look at their interest income, okay? So their income from operations was about $4.1 million, right? But their interest income was over $20 million, okay? So that basically means they have a bunch of cash that's somehow yielding them money, and I'll get into that in just a moment, and we'll find out what's going on in their balance sheet here, okay? And so they're making a fortune off of that now, and so overall, it makes them have a positive net income of about $19 million or so here, okay? Now, in this higher interest rate environment, their interest income should continue to pour in for quite some time here, nonetheless, okay? So that's great news. Now,
okay, look, this company is not a bond fund. If I want interest income, okay, I can buy bonds. I'm not buying Palantir for interest income. That doesn't make any freaking sense. Oh, look at their interest income. Yes, they have a ton of cash. They're probably parking some in treasuries and agencies and whatever, agency bonds. That's not amazing. Like, what are you using your cash for? You just have cash just sitting on the balance sheet. I would almost say that's a bad thing. This is a bond fund almost. It's ridiculous. So stop pointing at the interest income during a high yield environment that could definitely change, when what's more important for Palantir is their profit from operations. What is the core business doing? The core business isn't making that much money. They still have a lot of expenses. I mean, 35% of their revenue is spent on marketing. I mean, that's fine, whatever, but they're still not that profitable from an operational standpoint. They'll probably become more profitable. I'm not denying that, But you can't point at the interest income and say, "Well, see, that's why look at that great interest income." That means they just have a bunch of cash that they're just holding on to. For what? What are they holding on to the cash for? Can somebody freaking explain that to me?
Look at this. Stock-based compensation was always so talked about, and it should have been with Palantir, right? This has become less and less and less of an issue. And in terms of total stock-based compensation, obviously down substantially, tens of millions of dollars on a year-over-year basis. So that continues to trend in the right direction here, okay? Now look at this. So big change here in terms of the quarter over quarter, okay? They put a bunch of money into marketable securities. Now my guess is they put that into treasury bills. Just a wild guess, okay?
Wonder where you got that from. Of course they did. What do you think they put it into FTX short-term debt? Of course, a lot of companies will just park their money in marketable securities. It makes total sense to me, okay? But that doesn't mean that's a good thing. Why do they have all this cash? Do something with it. I don't know. Pay a dividend if that's what you want. Buy back some shares. What's the purpose of all this cash just sitting on the balance sheet doing nothing except yielding interest, which I could get with a freaking bond fund? So I have a money market account. Okay, yeah, my money market pays me interest too. I don't need to buy Palantir to get interest income. Look at this analysis, man. Oh, current assets, current liabilities. Wonder where he got that from. Total assets versus total liabilities equals equity. So he did the accounting equation and he did the current ratio. You need to definitely pay him $2,000. Okay, definitely.
So here's the math I did. If they have that money in Treasuries bill now at this point in time,
oh God,
they're likely making between, and it depends on what Treasury bills they own, they're likely making $70 million to $100 million a year now in basically, you can call it interest income, whatever you want to call it, okay, from their T-bills and just having a bunch of money there. That's a lot of money, okay?
Yeah, but what could they be making with that money if they actually put it to good use? This is a company. This is not a bond fund. So let's do his math here. So he did 70 million, which are the full numbers, 1,639,787,000. So he's saying the annual yield is like 4.3%. Okay, that's reasonable. Makes total sense. Fufu actually did his math right there. Okay, but this is not something to be happy about. This is I don't know. Why is this such a big deal to him? That they have a bunch of excess cash they don't know what to do with? Buy back some shares, clowns. Do something with it instead of just having it sit there. They'll probably buy back shares once the stock goes up.
70 mil to 100 mil, and that money should continue to pour in. And I don't know whether they're in 3 month treasury bills or 6 months or 12 months. Who knows? Okay, but if you look at treasury bills, a lot of them have been yielding. Look at the past 6 months. Treasury bills have pretty much been yielding 4 to 5%, somewhere in there. Okay, so nonetheless, folks, they're making bank from that. Okay, total current.
Yes, so do bond funds. So my money market is yielding the same amount.
Assets come in at 3.2
for zero risk, by the way. There's always risk, okay, but my money market fund just basically stays at $1 and yields me interest. I put some savings in there, and I just get 4 and 5% interest annualized. Why would I buy Palantir for this? A company when I could just buy a bond fund or put my money in a money market account.
$2 billion versus just over $3 billion in this on the previous quarter. Okay. Total assets, almost $3.7 billion in total assets. This versus total liabilities of $879 million. I love that. Total current liabilities, $601 million versus $3.2 billion total current assets. Okay, so their balance sheet is an incredible place. Total stockholder equity of over $2.7 billion. Okay, extremely, extremely, extremely impressive. Right now, here's where things get even bigger, much bigger, okay? Liabilities.
All right, let's go back and look at their equity section. So where does their equity come from? Because a company could have a ton of assets and no debt because they could have their capital structure be all stock issuance. That doesn't mean it's an amazing company. That just means they've chosen a certain type of capital structure. Let's see where all of their equity came from. Why don't we? You probably can't see it that well at the bottom. Common stock and additional paid-in capital. They have accumulated other comprehensive loss of -$4 million, and they have an accumulated deficit of $5.8 billion. So all of their equity came from stock issuance. What? You mean they're just now becoming profitable and cumulatively they've lost $5.8 billion, but they have $2.7 billion of equity because there's a bunch of stock issuance. He's such an idiot. And you know what I'd also notice here? Does he cover the statement of cash flows? Okay, so the rest of this is just garbage. Let's see if he actually gets in the statement of cash flows. Okay, he's looking at revenue.
Hey there.
Oh, shut up, clown.
Diversify by my stocks, bro.
Okay. Try to see if he looks at the statement of cash flows. Yeah, the rest of this, he's just reading through the report. Like, he doesn't even look at he's such an idiot, okay? So just reviewing what we learned from Jeremy. Here's what he did. He circled every single line item on the income statement, except for interest expense and other income. He circled literally everything. He's bragging that Palantir has a lot of interest income, which has nothing to do with the core business. This is not a bond fund. This is a publicly traded company that does spooky alien stuff, okay? And then he goes on the balance sheet and he points out how their equity is so amazing. Okay, yes, their equity is amazing because all of their money, all of their equity has come from stock issuance, has not come from profitability. You can have a fortress balance sheet. You can have an amazing balance sheet and still have a money-losing company. What a freaking joke. Let's do some comments. I'm an absolute moron. Oh my God, I have 127 viewers. Oh my God. Palantir. I know why people talk about Palantir. I'm telling you. People talk about Palantir because it just automatically attracts viewers. Oh boy. By the way, guys, if you want me to do a dedicated video, which this was a paid video, I was paid to react to Jeremy's looking over the financial statements. Click that link, send me $40. And I'm actually going to be raising prices to $50. I'm getting too many freaking requests. I can't handle all this volume. Someone pay Belly Boy for a tattooed chef mukbang. Okay, if somebody wants a tattooed chef mukbang, it's going to be $50 because I got to go buy the tattooed chef Buddha bowls. That's going to cost me money. Let's see. Strawman, I'm looking to get into accounting. Have you got any good books you would recommend? Greatly appreciate your work and time. Accounting books. I don't know, man. I would just watch some, I hate to say this, I maybe watch some YouTubers that like explain what accounting is like. Or you could give me $40 and we can meet, or I can do a video for you. But I don't know any like specific accounting books that wouldn't drive you freaking insane. You know, you just kind of have to go to school and learn it. General Dynamics already does everything Palantir thinks they do, already does all their crap. I don't get the obsession with the stock, man.
They're profitable now. Oh, they have a bunch of interest income. Oh, it's a bond fund, guys.
Revenue by Avenue is circled because it's like he circled that there's no analysis there, okay? You should do vertical analysis. You should do horizontal analysis. You should look at margin ratios, margin percentages, instead of just, well, the numbers went up. And then on the balance sheet, he doesn't know what he's looking at. And he doesn't even cover the statement of cash flows. He's an idiot. Nothing. He's learned nothing, okay? He's basically copying what I do. 100% he's copying me. What an idiot. Of course, he has more subscribers. Will Biden save America? I don't care about politics. It's a waste of time. Don't all stock depend on the bigger idiot theory that the only way to get your cash is getting a bigger idiot to buy them? No, I think there's a pretty good idea that when you buy a company, you're a partial owner in something that actually provides real goods or services, okay? Real goods or services. It's not like a gold where, oh, it's a shiny rock today and it's going to be a shiny rock tomorrow. If you buy a share of a company, your share of the company could, like let's say you buy a car company, you could own a part of a factory, and then 30 years in the future, the company's expanded and grown. And now they have 50 factories. So you own part of 50 factories. You could actually have real growth, real earnings, real value by owning a company that actually provides goods and services. I prefer when you provide useful content. Would you say this is useful, or would you say this is clownish? Hey, Strongman, do you say during your quality time with Strong Wife? I'm married. I have kids. I don't even know what quality time is anymore. That's top secret. You have to pay me $1,000 and I'll tell you. Palantir growth rate is slowly becoming that of slowly because of it's the macro, bro. It's the macro. Okay, but it doesn't matter. People value the stock based on 30% growth, and they're still saying it's going to go to the moon when their revenue is slowing down. What's the value of the company now? A lot lower. Now is when you buy the Federal Reverse course, or you could just buy VT. And trust me, VT will go up a pretty significant amount when rates get cut. I guarantee you. I'm going to make big freaking money with VT. Let's see. Strawman also doesn't matter if gross profit and they continue to dilute. Yeah, more profit, more people to pay, no gain. See, that concept's too advanced for some people. Palantir is the new chef. The chef was worse by far. I'll give Palantir that. What happened to the planet? I haven't heard Lefebvre. What happened to the planet? That's a good question. I need to go look into that. What does make me laugh also is that he blew his views with Tattooed Chef, but his subscribers haven't dropped. Well, he's got a lot of subscribers that don't watch him anymore. Let's see. Strongman rolling in dough. Okay, I have made a decent amount of money with these, but I'm not like a millionaire now. You know, I've made a couple $100 off of this, but I need to raise prices because I'm getting like people like, oh, do this, and it's like, oh god, this is too much. Don't worry, I'll get to everybody. Palantir needs Bud Light's marketing team. Palantir experts like their History Channel. Oh, God. Let's see. All right. Let's see if there's any more comments. I'm about to shut this down. Strongman sounds like Emo Dave. What? Emo Dave Ramsey. Do I give the vibe that I'm emo? Really? Are you insane? Let's see. Oh, it's BP. Mike Stathis. Yep, go pay him $1,000 an hour. That's what he's like. Oh, you should buy index funds, and he's like, oh, you should pay me $1,000 an hour. Whatever I freaking do. Okay, what a clown. Let's see. Raise the price to 80. Yeah, I got to think about pricing. I'll probably go up to 50 and see what happens there. See if demand slows down. VT won't make a large percentage gain compared to something like Oatly. I would disagree. Oatly can still go down and VT can go up. Palantir will outperform VT. I mean, you could start from any time period and say something outperforms. But overall, VT has done much better than Palantir. 100%. And most people that bought Palantir are down massively. I'm up on VT. Let's see. Strongman think this Chris Darden. I don't think that's Kid Freshy. Historically, stocks go down after the rate cuts because everything is already broken in the system. Yeah, but eventually at some point, stocks will go back up. I don't know if it's going to take a year, 2 years, 5 years, 10 years. I don't care. I'm 33, okay? I can buy stocks for the next 10 years and they go down. I don't care. Because at some point, I'm pretty sure they're going to go up, okay? The economy gets better. We produce more goods. We become more efficient. Workers become more productive. The world gets better, okay? But not all clown stocks will go up. Yeah, everybody liked this video. Your portfolio gets converted into Tattooed Chef. Let's see. Mike Stathis needs to come back. Oh, he should. I would love to have him come back. I would destroy him again. He knows not to mess with Daddy anymore. I obliterated him. Okay, I crushed his little nuts. Just boom, boom. Former subscriber, it's hard for me to follow a DGN that indirectly cost me 10K, shilling dog crap, live and learn. Now my dumb butt is sticking with index. There you go. See, you learned your lesson. Max your IRA, max your 401k, buy broadly diversified index funds, and you'll be fine, okay? You'll be able to retire. And you'll retire a lot better than the clowns listening to Jeremy. What if the world gets worse, but only pound? Oh, I don't know. I mean, I'd rather bet on the world than a random company that has been unprofitable and has almost $6 billion of cumulative losses. But they have interest income from their cash and their treasuries that they bought. Wow. Oh. Wow, I'll just go buy a bond fund. Do you have cable or Fubo? I have neither. I don't watch sports. I bet Mike Stathis tried to come back, but heard the word. He got triggered by that. All right, guys, thanks for tuning in. If you want me to make a dedicated, and it doesn't have to be about stocks, okay? It could be anything you want, as long as it's not like stupid. Like I'm not doing something ridiculous, okay? But if you're like, hey, I want to learn more about accounting, tell me about your experience at NASA. Tell me about your experience in public accounting tax. Tell me about the Army strong, man. Tell me about this. Tell me, I want to know. Tell me about being married, kids. What you pay me $40 and I'll make you a dedicated video. Or we can talk about stonks, whatever you freaking want. Okay. That's it. Hope you enjoyed the video. And okay, last comment. Stathis exposed you big time. That's why he's begging me.
Oh, please delete the videos. Oh, please, strong man. Please, please, please.
You only got him banned. I didn't get him banned because you had your minions reporting him in cyber. Oh my. Okay, well, I'm not even getting into this. This is ridiculous. All right, good night, everybody.